Hey everybody, welcome back. ES eked out a little bit of a gain there. I think it's really important that we discuss what happened over the weekend with Biden dropping out and why you're seeing certain sectors move. So let's get to the news and then we're going to cover three big topics. Now we're going to start with the basics. Obviously, Biden dropped out. Everybody's aware of this. And what he did was also VP Harris gets the nod. Now this is important for a couple different reasons. It creates certainty. So I believe at last count, it was like an 85% chance she gets the nomination. So now this is established. What the market doesn't like is uncertainty. So the one thing that happened today for sure is we have more certainty in the sense of we know it's not is he, isn't he? It's like he is out, she is in, and this is who's running. That defines this, and it really helps us as traders for a couple of reasons. I'll start. So one of the things in Biden's administration that he's done a really poor job of is crypto, hands down. I even have guys like Mark Cuban that are independents who are coming out and saying that anti-crypto Biden administration, he's slamming the SEC. This is as soon as May. And one of the things that he's done is he's created this window for Trump. Now, this is good or bad, depending on how you look at it, but there's a huge growing discontent among the crypto community, specifically that voter base. And you've seen that reflective in his policies. And Gensler has been fighting this tooth and nail. Gensler is the current SEC chairman. And even if you had Harris, and we're not here to debate politics, we're here to talk about monetary and fiscal policy, the chances of Gensler staying in once Harris is in is pretty slim. But what we're going to see now is we're going to see a change with the SEC, and this is going to help crypto. The current administration has really cracked down on it from anything from XRP, Binance, Coinbase. It's really been a real issue, and every time you turn around, it's something new, and there's no cohesion to it. This is very frustrating for investors. Now, what they did was they left an opening on Bitcoin. Suddenly soars on wild rumors Trump will create a U.S. Bitcoin strategic reserve. Now, whether he does or doesn't really doesn't matter. What matters are two things. The SEC will wind up changing hands, meaning whoever runs it, whether it's Trump or whether it's Harris, it doesn't really matter. They will change hands. And some people say, well, if it's the incumbent, they'll leave the same people in. It's very, very doubtful. But what I would say is, based upon what you're seeing, they're going to have to do something on both sides of the aisle. Whether there's a strategic reserve or not, we don't know. But what we're seeing is that this is very positive for crypto, and this is the reason why. Again, this was reiterated today. Bitcoin U.S. reserve currency. Trump team reports considering adding Bitcoin to Treasury. Now, again, we're here to discuss this, and it's like threading a needle, but we're here to discuss this on a monetary and fiscal policy basis. But we have to understand a couple of things. Number one, when we look at this, we can see even from the 19th, it became abundantly clear that this is the way that we were going, and you could start seeing it move. There were rumors on Friday that Biden was out. And then from those movements on, if you take the zero line over, you can see the moves. I just threw the ETF in because it's easier, but look at coin and MSTR. So this is one theme that is perpetrating throughout the day and has been perpetrating since Biden has stated that he may drop out. And of course, now he has. So this is the first really big theme. And I would think that this theme does continue, meaning this will be a talking point during the election. Now, the second big theme has been sanctions of AI chips, meaning not allowing China to have certain AI chips. And this has really been weighing on the semiconductor equipment manufacturers as they could be targeted by new restrictions, but it's actually even worse than that. Once they set restrictions, they keep moving the restrictions, whether they're up or down, they keep changing it. That's very difficult to do when you're spending billions and billions of dollars. For example, they said to NVIDIA, you need to change the specs of this if you want it to go over. They've changed the specs, and now they're saying even though they changed the specs, that still might not go after they spent billions of dollars. Now, these were two issues that were out there, and my belief is that these are going to be put on back burners now because you're going to have the current incumbent that is going to focus on the transition of power. They're going to focus on getting Harris reelected. They're not going to focus on this as much. That is my belief, that they're not going to have this, quote, tough stance. They're going to focus on winning. You never know how this is going to go, but the market's agreeing with me, and we'll get to that. But according to a report from Tom's Hardware, the U.S. is considering implementing a new trade sanctions looking to limit China's access to advanced AI chips. Could result in a ban on the H20 to China. NVIDIA could potentially lose roughly $12 billion in revenue, and it's not just NVIDIA. NVIDIA could find a key part of its China business blocked. Now, it's just not NVIDIA that would be affected by this. It would be all these semiconductor equipment manufacturers. And what I want to do is I want to show you the difference between this, what happened, and what happened the next day. So Here's earnings on Taiwan Semi right here. And then you see the 19th. And what we did was we had follow through when all these sanctions were mentioned. And then after the resignation, what we're saying is we're seeing a lift here. Remember, that's not Trump's plan. Trump's plan is not sanctions. The way that he's looking at it is tariffs and implementing some type of tariff structure. How that's going to work remains to be seen. I'm simply stating the differentiation between the two plans, and the sanctions idea is just like moving a needle over and over again, and it's extremely frustrating for people that are investing in semiconductors, and it's actually putting the brakes on people wanting to even buy chips or buy equipment. Third is domestic policy. Just so we're clear, tariffs are bad for global companies. Microsoft, Google, those kinds of names, they're bad, even though you saw a relief rally today. They are good for domestic companies, small cap companies. Therefore, between the 11th, which we've gone over in that CPI number, you can see what's happening here on the RTY, ES, and NQ. Really important distinction here. At 10 o'clock, when everything was down and you had the flush in RTY, after the flush, and then you went sideways, after that, RTY continued to lift. So it's realistic to expect RTY and those sectors that we've gone over in the past that they will continue to lift. It doesn't mean that there's not opportunity in other spots. We're going to get to NXPI in a moment here, but it's really important to understand that these three things have changed specifically based upon what you're seeing going on in the election. And that's the only reason I'm really talking about it. But it's important to get these three narratives because they're not going away until November. Now, what's interesting is both sides are going to want to be the party that goes out there and somehow is the party of getting pot legalized. So all of a sudden, you're just seeing the marijuana stocks lift because of what Vance did in Ohio, and also because the Democrats have been saying it forever. But here we are. And so you're seeing that push today. You're seeing KRE push today, RTY. Obviously, we're seeing that push. And you're going to continue to see these things where you're seeing the home builders lift. You're going to see, this is home construction right here. And you can go through the names that are actually lifting, the real estate investment trusts, so forth and so forth, regional banks. This is not going to change. This is going to be the theme. These three themes are not going to change. I would get used to this. And again, it doesn't mean that there's not opportunity to trade the other names. There certainly is. Now, this evening, NXPI missed. And they missed and they lowered guidance. Now, the question really is, did they lower guidance because of demand or did they lower guidance because of the sanctions? Now, you would say there's no sanctions on NXPI, but it's all connected. You're not going to buy new equipment. You're not going to need that new analog chip. You're not going to need that new widget if you can't go out there and do what you want to do. So what we're starting to see is companies like tonight, they're lowering guidance. And is this a theme that we're going to see? Tomorrow, we have two real big dogs that are going to release. And that's going to give us a sense of it. But after hours, they missed on the earnings side, revenues beat, and they lowered guidance, which is really somewhat shocking. But we are seeing some kind of rally, or we're seeing some kind of rally in some of these names. And I'm going to just give you a bunch of names that you should look at. So AMAT, for example, and if we take a look right here and go through them, all these names here were AMAT, Lam Research, Taiwan Semi, all of these names, roughly 40% of their business, including ASML, come from China. And so if you start putting sanctions on these names, it's going to be a real problem for the group. And what I think that's going to lead to, let's go back to this and do it this way. What that's going to lead to is it's just going to lead to more chaos, for lack of a better term. And I think that we're through the woods on the chaos to some extent. It doesn't mean that this is going to be the best earnings quarter of all time. I actually think you have huge comps to beat. We're about to get to that. But I do think you need to be aware of that, and I do think it presents opportunity. For example, if you look tomorrow night, I will do that in a second, but if you look tomorrow night, and they rearranged all these up here. I'm not really sure why they did, but they did. So I'm trying to get used to it. They did it on an update. They should really think about those updates. If you think about tomorrow night, you have Google coming out, and this is a huge comp beat. Now, the flip side of this, without any of the administration stuff and the election nonsense, what we have to deal with is huge comp beats that they have to worry about. You know, they've been beating these comps for some time, and now they're starting to get lower bars. And what we're really looking for is they need earnings revisions to the upside to keep this going. Now, last time they beat and exceeded, and if you look at last time on Google, they crushed. That's a big number for them to come out and beat. You come here, And they kind of crushed, but they didn't raise. And so it didn't go as well as here. So are they going to beat and exceed? And how much did that AI spending pay off? This is a big deal tomorrow night, guys. I actually think that this is going to set the tone for the Magnificent Seven. I really do. It's definitely going to be worth watching. And then on top of that, you have Tesla. Now, Tesla rallied. It looked like it was going to go, but you're seeing a lot of this nonsense, and I'll show it to you. Where, let's get rid of the pre and the post for a second. And I would be very, very careful of the nonsense because you're seeing a lot of it. But watch this demarcation line right up here for a second. And you can see how they pop you over like it's going to go, and then they rip you back down. And they did it here today really early on, and they set up like a really beautiful short for me. And it was super clean. I'll show it to you, where you can actually see this level right here. And I would strongly suggest in this kind of market, how fast these drops and rallies are happening, that you mark these off ahead of time so that you can get a sense of them. Now, if you look at this level right here, okay, once you got to that doji and you broke the doji and you faltered, tried to rally, broke down, that was it. It was a really simple trade. Here, take a look. There you go. Now you're starting to get tops, blow off wicks. If you were interested in puts, this is where you would try it. It's actually not the worst spot in the world to try and short that. I'll know in 3 minutes if I'm right or not. If I shorted some, it's not going to cost me much. 149 and a quarter, I'm short. If it goes and rips up, then I'll just give it the minute to play out. But that might be the exhaustion of 50. You see the level right here? I'll show you. Got to it, resistance, flips, resistance, 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 and then we stop. If I use the top of that bar, once it forms, I don't really have an issue. It's really going to cost me $1. You're dropping, but are you really? Or are you just kind of milquetoast? Oh, that's nice. That worked. I'm up about $2. I'm going to pull something out of that. It never really triggered. There's your wick. They pulled this nonsense, right? Then they did this, the flim flam, gave you a shooting star. They couldn't have made it easier for that short. You just have to have patience a little bit here. Still short, boring, but working. Trim some right into that because that's a support level that might hold. I don't think it's going to, but that gets me up a little over 2 and change on it. So I did trim some of the Tesla right into that. Now, hopefully you found that helpful. I think it's helpful to see what's going on under the hood. I also think it's helpful to focus on what's going on and get rid of all the rhetoric and just say, okay, this is really what the core issues are. I find that extremely helpful. As always, you can comment below. Again, let's keep the politics out of it and let's just focus on what actually will make us money. I think it's very important to understand a couple of things here. This is 930. This is NQ. This is exactly where you opened. This is exactly where you closed. If you take a look at RTY, and you see what's going on here, and we just mark that 930 bar again, and let's get to that right there. And you use the difference here, you can see a major turn between where they put the money. Now the question is, how much money's out there? And people keep saying there's a lot. Well, you don't have corporate buybacks for another 2 weeks, and you have us, which are retail, that is extremely exhausted. Here, take a look at smart money, dumb money. In front of us is smart money, dumb money. And what's important about this is it tells us what institutions and it tells us what retail are doing. So we don't really refer to it as smart money, dumb money, although that's how they quantify it. We refer to it as institutions and retail. And why is this important? It's important for a couple reasons. This lets us know what institutions are doing. And there are times where you can see right here, red, where dumb money is, and blue is smart money. And you can see very clearly how they're outlined, right? And then the higher that they go, the more confidence that they have. And then you hit a point of utter confidence versus utter, we have no interest. The spread is what I think is most important, and we'll get to that in a moment. Because even if you're over the top here, where dumb money or retail is all excited and institutions are not, you can still go higher. And the reason for that is because institutions are buying and retail is kind of slowing down. Where this starts to become an issue is if retail starts dumping faster than we start seeing institutions buying. And then if we do see that, it can mark a high. And that's one of the more important things of this. So it's not just the spread, it's the velocity in which it moves. Now that's a big distinction that I think is lost in a lot of people here. Most people will look at this and go, oh, it's over, therefore we peak. Well, then why didn't it go here? And the more that you read and the more you understand what these things are, the more you can use them to your advantage. For example, it really doesn't matter that we peaked here. It doesn't really matter that they're selling here as long as institutions are coming in behind us. Now, what we have here is we have a somewhat different situation, and I'll explain. In this case, we have retail that is pretty giddy up here. We have institutions that over last week, no matter what we hear, they're buyers and they bought in here for a period of time. Now, for how long, that remains to be seen. Just one more time, this is not my graph. This is by Sentiment Trader. I have no affiliation with them, but it's a decent product. Okay, and I like the way they outline it. So if we look at that, then we know that retail is pretty much maxed out. So who's going to step up to the plate? Well, we have three kinds of buyers. We have corporate buybacks, where they go out and buy their own stocks. We have institutions, pension funds, hedge funds, long-only funds, and that would be under smart money. And then we have retail, which would be under, quote, dumb money. So if we know that corporate buybacks, and we know that they are in a blackout window until next week, which they are, and then we know institutions are left or retail's left, so institutions are left, retail's left, and retail's maxed out. So who are we really relying on? Institutions. Well, institutions have been dumping at an alarming rate, and you can see how fast they dumped here. So we don't really have anybody, and we're going into earnings season, and this is where it gets somewhat precarious. And I'll give you an example. Most people are going to look at this and then just say, okay, well, when this drops, we need them to come in. And then when they don't, it's the rate of change that they come in. And it's not even the rate of change when it's dropping from smart money. It's the rate of change that smart money is getting out, i.e. institutions, versus how fast retail is getting in. So as long as retail is getting in and smart money is going sideways, then all we really care about is the spread. And the spread to me is more important than where we are. But it's always important to understand where you are. So knowing that you're going into the blackout period, which we talked about a couple of weeks ago for corporate buybacks, knowing that that's coming to an end, knowing that institutions are buying in here, well, this gives us a whole litany of data going into earnings. Now, what we're always looking for is that somewhat sweet spot, we'll say, where you have retail getting out. You can see that right here. And then as they're getting out, institutions are getting in. Remember, retail pukes one way or another, and institutions just take their time. They'll use things like equity risk premium. Retail uses things like feelings. So if we see how that's acting here, right, that's lifting up, and at the same time what's happening here, they're selling. Well, what happens when they cross? You have a bottom. So then you start looking at areas like that, and it starts getting pretty obvious, right? Even to the downside, you're like, well, it broke to the downside, well, it broke to the upside. It doesn't matter. What matters is the strength and the difference between the spread. Same thing here. If we look here, we could say, oh, well, retail's buying and going sideways, but institutions are selling. Well, institutions are selling at such a slow pace that what we're seeing is immaterial. Now, what could happen is if institutions stop and retail starts puking, that we do have a more greater sell-off than what we see, or a greater sell-off than what we see. But for right now, this is what we have. So the spread to me makes more sense. I like knowing the extreme levels, but the spread just makes more sense. And if you think of it this way, say like smart money was a 50 and dumb money was 100, and this spread would then be 50%. And then as that spread starts dropping where dumb money is actually selling and smart money is buying, well, then you're going to get those levels to drop off. And as they drop off, as long as it's in a position where it's putting us in a position where smart money is getting in faster than dumb money is getting out, it's really important to get that, because then what happens is the numbers drop. And as the numbers drop, then you're going to get these levels that are going to mark off, right? Same thing here. What's more important? Just the drop, okay? And then you can see it over and over and over again. So I think that focusing on the spread, I like knowing the differentiation between the two, but when it comes to, is this actionable? To me, it's the spread. And then what do you do with the spread? Well, you understand that when you're oversold here versus the red line, and then you start seeing us coming up, you have to understand that it's going to possibly mark off an area. But until then, you don't know where you're going. So in other words, and I'll show you what here, this is a good example. So if I was to take this peak and come up, we would note that that's going to mark right around that high. And then if we took this peak, we're going to note that that comes in right around that low. Now, it's not an exact science, but if you took this low and you came straight up, you're going to see that you're somewhere in there. And as you're going up, what's happening? As you're going up, you're putting yourself in a position where the market's coming down. So as this peak is here, it doesn't matter where it is, right? But when you start turning, then, and when it starts to drop, you're starting to get these levels. And you should be able to see this pretty clearly now on how that's playing out. And it doesn't matter where on this 3-year period we do that. But again, you could even do it here and say, well, look at that. And then all of a sudden it got washed out, and then you start dropping. And then what starts to happen with the drop? It doesn't matter when. It truly doesn't, because all it does is just allow us to understand, oh, we're going to go higher because of the drop. And what's that mean? It means smart money is buying faster than dumb money is dumping, usually, is what it means, because we're the ones that get giddy. Now, if you take a look at this right here, you can see that what's starting to happen, we're starting to point up. Okay, so this is starting to point up. Well, what happens when this starts to point up? It tends to mark what? Tops. When it starts to point up, what's it do? It tends to mark tops, okay? And again, we don't know always that that's what's going to happen, but that's what we tend to see. And then it stops when it reverses and starts to point down. So if for some reason this started to point down for any reason, we could assume that that could be it. But for now, this is what we have. And if we look at this on a year, just year over year, I think it gets a little clearer. You can just see the depreciation where it just kind of goes sideways. And then when it marks, we just start to drop. No different than this. And it's not like you're looking for these huge corrections. You're just getting these bumps. And then when they start to reverse, you start to head higher. No different than this. So the question is, at this stage, you can see that we're selling up. So that would mean that the S&P at this particular time is setting up for what we could consider a level of underperformance, because we just don't have the wherewithal. We don't have the buyers. In other words, smart money is not buying fast enough for what dumb money is doing. And we also know that we don't have corporate buybacks. Now, as always, your comments are appreciated on that. I got asked a lot about showing smart money, dumb money. That's why I did it. And really take a look at that confidence spread. And you sharing these videos, it helps me greatly. That's why you don't see commercials in between here. I purposely don't do it, but if you find value, I appreciate you sharing it just to get the message out. But let's go through a couple things here. So every week, I'll just take the earnings on the week and then just list them. There's a couple here that you should watch tomorrow morning. You definitely should watch Spotify, UPS for sure. You should be paying attention to. FCX is kind of interesting. You have earnings tomorrow, and after copper just dropped 9%, you might want to pay attention to that. The big dogs tomorrow night, Tesla, Google, ENPH. Visa, you have a lot. Texas Instruments, which absolutely crushed last quarter, if you remember. So you have some really big dogs out there that are setting up quite nicely, not to mention even the secondary names that people don't pay attention to, like Capital One or even Seagate. These names can have massive moves. So we have a lot on our plate tomorrow. That is it.